What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is April 5th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I thought I would spend some time doing what I do from time to time here on the channel, and that's rambling and raving a bit, sharing my candid thoughts on the current state of the crypto market. And what better place to do this than here on the beautiful coastline here in Florida, as I'm finally back in the US, not only spending some much needed time with family, which has been really fun, but I'm also looking forward to the upcoming Bitcoin Miami conference in the coming days, which I think will be a really good gauge on the sentiment of the market and some of the upcoming innovations and projects in the space. So if you guys are interested to meet me there, I'll leave a link down below in the description where you can get tickets, and also you can use the coupon code DATADASH to get a discount off on your tickets. So let's go ahead and dive into the conversation, guys. First off, I want to go ahead and spend a little bit of time to talk about what's been really on my mind as a recent. You know, I always try to think about, as I think about things on a macro level, I always try to think about the big overarching things that could be a major positive to drive crypto markets higher, or negatives that could drive crypto markets lower. And the one that has been constantly on my mind is the topic of inflation. Now, inflation is not only a clear and present threat at the moment, but in my opinion, and I honestly kind of stand in a contrarian viewpoint, I think a lot of people believe that the worst of inflation is beyond us, that we're going to start to see a curb in inflation, that the Federal Reserve is going to start to increase interest rates and therefore lower the inflation rate in the economy, cool things down, right? Do the necessary actions it needs to. I like to turn to history because history teaches us more than we can learn from any assumptions that we can make here, thinking in positive terms. And if we look back at the 70s, we can see that we're repeating the exact same mistakes here. So let's just first go ahead and put things into context here. Right now, at least as of the recent numbers that we saw back in February, we are at an inflation rate annualized of 7.9%, nearly 8% year over year. Meaning that the cost of the average good or service that you're going to be buying in the economy is on average up 8%. The cost of living is up 8% in the United States alone, and it's worse in other countries across the world. I think that's important to state here. We get a lucky here in the United States. It's even worse in a lot of other parts of the world. This is the worst level we've seen since back in the 1970s. The fastest acceleration we've seen in over 50 years for inflation. And I'm going to tell you all, when the March numbers come out, and eventually the April numbers soon after, I wouldn't be too hard pressed, and I wouldn't go against the idea that we'd probably be up towards 8.25, 8.5%, taking up very close, probably by the end of this year, towards double-digit annualized inflation rates. That's right, I'm talking over 10%. Now, why is this such a big deal? Why is this something to be so concerned about? It's something to be concerned about because when the cost of goods and services goes up this much, when the cost of living accelerates to such a high degree in a short period of time, this squeezes and punishes not per se the high net worth and the very wealthy individuals, but a lot of the everyday individuals. And along with that as well, can serve as a slap on the wrist for those who have large amounts of money who are trying to just protect their purchasing power. At the end of the day, it hurts everyone here. And the reason why this is a very big macro factor when it comes to crypto, and I think that's the ultimate topic we got to talk about here, is because for the first time in history, sure, you've got stocks, sure, you've got bonds, sure, you've got commodities like gold and silver, right? You've got all these different potential flights where you can park your money and protect your purchasing power. None throughout history have had the sort of monetary policy or supply-demand formula to accelerate as much as cryptocurrencies. They simply didn't have the properties in this programmatic fashion of finite or dramatically limited, if not deflationary, truly deflationary monetary policies. You have stocks that you want to invest in, well, they can be diluted by tomorrow if they vote on issuing new shares. You want to go buy gold and silver to hedge against the uncertainties of monetary policy? Well, gold miners are probably going to bring about 2% new gold in the market every single year in 50 years, right? You're talking about well over losing your original purchasing power. Want to talk about bonds? Well, bonds are pretty much a negative real yields when you consider the inflation rate in the actual economy, and on top of that, the lacking yield. And some of them actually have negative interest rates. The point I want to make here is that Bitcoin, Ethereum, other established crypto assets that are liquid, that are available for people to get access to, are going to be the best bet in an environment of inflation. And I'm gonna tell you guys again, I can't tell you all with more confidence. All right, I'm not here to tell you guys about the next 5100x coin or to go leverage trade or do all these really silly things that people talk about on YouTube. Not that kind of person. If you want to go watch that kind of stuff, that's fine. You go watch it, right? But I know you guys are a much more rational audience here. You guys are much more focused on the macro picture, and you're probably concerned about protecting your wealth and thinking about the future. Crypto is the only asset class that's going to do this. And to be honest with you all, like considering the scale of growth that crypto still has, I can't even imagine what we're going to see here in the next year or two. And I think it's very realistic to get up towards $150,000 to $200,000 Bitcoin, because right now we're treading below $1 trillion valuation. Bitcoin can easily be a multi-trillion-dollar asset. Same with Ethereum. And we're just trading in the hundreds of billions of dollars. I gotta tell you all, this is why I'm so confident on it. You guys think that we can't see that price action? We've seen much higher growth multiples in a shorter period of time for crypto. And with the inflationary pressures we're going through right now, it's only gonna get better for crypto. And I'm not saying that in an incredibly positive light. It's unfortunate. I would rather there not be inflation in the economy. I'd rather there be a central bank that's capable of curbing inflation rates, doing what Paul Volcker did, right? Fed chairman back in the late 1970s to early 80s, where he pulled the Volcker rule, where when inflation got out of control, he spiked interest rates, or the Fed funds rate, to increase the base cost of capital. And that stopped the rapid acceleration of new credit in the economy, and yet put the economy into a short-term recession. It certainly did. But we've been through many recessions before. And unfortunately, what the Federal Reserve is not doing right now is what Paul Volcker did do back in the 80s. And if the Fed continues this for long enough, they're going to repeat the same exact mistakes that we did in the 70s, thinking that it's going to get better sometime soon, that this is transitory, that this is short-term, and unfortunately, it's not going to be. Not until the Federal Reserve finally pulls the switch, and it is going to just hurt more as we delay it longer and longer. Things that are out of our control leave us in positions where we have to prepare ourselves to the best of our abilities. The only thing we can control is how we hedge ourselves, how we expose ourselves with our personal wealth. I don't want to get all preachy about it, but to be honest, I get really fired up about it, guys. But the most important thing you can take away from this, whether you agree or disagree with me on inflation and how the Fed should deal with it, is that you've got to protect yourself. And I think that this need to protect your wealth, the demand for assets that have solid supply and demand economics at their disposal, that is going to be the reason crypto drives up. That is going to be so much more important than just institutions buying crypto, corporate treasurers buying it, retail investors buying it, because all of those topics fit in to the need to buy crypto to protect themselves against the depreciation of their own wealth. This is one of those once-in-a-lifetime opportunities, guys. And it would be so terrible to lose that opportunity trying to focus on getting in and out of the market, leverage trading, trying to find the next altcoin gem. We've got so much more ahead of us here going into the coming months and year. And if you just focus on that long-term trajectory and you see the macro issues continuing to manifest, I can tell you all, you're going to be much better off for it. There's a really interesting chart we've talked about on the channel, and I think if you guys want to take this away and why I'm so cautious about this, it's a really interesting chart that showcases the inflation, almost the inflation decade that we had back in the 70s. And what you find, if you map it as well, like what they do in the chart is that they map over the spike or increase of inflation back from 2020 when we started the stimulus checks and the money printing, debasing the money supply more than we ever have in history. They showcase the similarities in the inflation over time, but they really point out one fact, which is that inflation will stay in upper single digit to double digit territory for much longer than you might think. Not just many months, but many years. And I can promise you guys I'm going to be here every step of the way with you all through that journey. One of the ways that I'm working towards trying to kind of curb this issue, and I think is going to be the solution that's going to bring a whole new wave of people into the crypto space like we've never seen before during this period of inflation, is a feature that we're working on for my startup that is self-funded, and many of you have participated in supporting as well. Digifox, where we're launching a new feature called Get Paid in Crypto. It is going to allow anyone in the United States to receive a portion for all of their salary in the form of cryptocurrencies like Bitcoin, Ethereum, and Litecoin, and earn interest on their assets. This is the kind of solution I think that is going to help bring in not only the new wave of people in the crypto space, but it's going to do it the right way. Not leverage trading, not speculating, but helping people to hedge and protect themselves. I think there's nothing more important than that in this world that we could be giving to people right now during these times. Right now, we just recently launched our Series A round. We're trying to raise about $5 million to scale up the company, bring this feature out to the public, and make sure we can bring this experience not only to people in the United States, but hopefully down the line, bring it to people across the globe. Because this is a global crisis that we're facing right now with inflation. If you guys want to support me on this journey, if you guys have been looking for a way to potentially invest in the future of crypto outside of just holding crypto, if you want to support me and you believe in this vision as much as I do, then you guys can check out the link down below in the description and check out the WeFunder page. You guys can invest. I'm very big on this idea of allowing anyone to participate, not just the institutions. So we're doing an equity crowdfunding. It's SEC regulated in this case, where you guys are welcome to join in, even if you're a retail investor, just putting in as little as $100 or any amount that you'd like. But respective if you guys decide to invest or not, most important is to make sure you protect yourself first. Make sure you've got some crypto. Make sure that you're protecting yourself for the future. And I promise you all, at the end of the day, you'll be in a much better off position than not having had taken any risk or exposure at all, especially if you've got a long-term mindset. All right, guys, if you enjoyed this video, consider dropping a like, consider subscribing, hitting the bell icon. It means so much to me. I appreciate y'all staying around for this ramble session. But until the next video, take care, everyone. Hopefully the weather is nice where you are. Have a wonderful day. Be thankful for the things that you've got. And I'll see you all in the next video. Take care, everyone.